Okay, folks, welcome back. There is a growing community of reviewers of educators and service providers on the YouTube platform. And I think it's in many ways good. And then there's other things about it that I don't necessarily like. And it's not because I'm afraid or concerned about anyone's opinion about me or what I do, because I've been doing free education for over 20 years. And this YouTube channel is a collection of things that everyone in the trading community can come to this YouTube channel and investigate the things that I claim. They can look at some of the things I talk about in terms of repeating phenomenon in the marketplace as it relates to foreign exchange. And then you, as the constant reader, determine whether or not there's any value here and or dig into it deeper and start applying it to your own studies. Now, everyone that comes to this channel invariably will be inundated with the level of concepts, the depth of and direction your studies can take you. That many times is very intimidating. And sometimes people come here and they see that and they think right away that there's no trading plan here, or there's no way to make this work. When in fact there's a myriad of ways of making it work, but it allows you as the viewer to make it uniform and unique to you. So I'm just going to introduce that as an opening statement, because while I do have a paid service and it's a mentorship that I hold the hand of my students and kind of like guide them through the market climate real time before it happens. And while that's not a signal service, I do not tell my students to buy here, sell there, put your stop here, take your profit. That's not what I do. I'm not licensed to give that level of advice. But I give my opinion about what I think the marketplace is likely to do using 28 years of experience this November 5th. So my community, both on YouTube and my paid community, both have a high regard for the things that I teach and me as a person, because number one, I put a lot of time and energy and passion into what I teach. Nothing forces anyone or twists the arm of any viewer here to pay me to join my mentorship. Many times I've had students come and watch the videos I have on this YouTube channel for free. It took multiple viewings on their part and study, but they found something that was their personal niche, and they have made a model out of that, and they can find consistent profitability, system setups, methodology, whatever you want to call it. They've made it their own. So I get lots of emails every month with individuals that are meeting their expectation and exceeding it just with the free level content here. So while I will be intermittently talking about, periodically mentioning my mentorship, it's not a plug. Okay, so I want to draw a little contrast between that, because what I've seen, and many of you probably are seeing the same thing, that there is this growing community of other educators becoming reviewers of other educators. Now, I have always called out every other educator out there saying, hey, look, can you do what we do? Can you be as accurate as we are in our analysis? And it's been shocking to see how many, especially in the foreign exchange market, Forex for short, that's kind of like where I settled in 2006. Now, prior to 2006, I was both Forex and futures, trading E-mini S&P and bond futures. And before I started dabbling with foreign exchange on the spot market, I was predominantly just a commodity trader, and I started in 1992. So if any of you are like me, you probably enjoy a good ribbing by someone that really deserves it. And you know, a lot of people in this community, the trading community, not just foreign exchange, they really deserve to be tarred and feathered, because you just know the things that they're saying are nonsense, and they're so image oriented to trap individuals into thinking they're much more profitable, or even profitable for that matter, to lull viewers into sending them money. And there are others that get more or less assaulted verbally or by way of a review video from an opinionated educator. And many of the things that are said are just opinions. Okay, they're just opinions of other people, and it's hard to differentiate someone that has a service or a product, okay, for sale, and they're pointing at other people saying, I think this person's a scam artist, this person's a scammer, this one's a scammer. And it slowly becomes obvious that these individuals are just looking to find a way to increase their own platform by hopefully reducing another person's platform. And I have been standing here for almost 3 decades doing the same things, saying, look, this is what the markets do. You go in and investigate based on what I've taught you here, and you see if it's true or not. Because if I'm fake, if the things I'm talking about aren't true, you're not going to see it in the marketplace. You're not going to see it repeating. You're not going to see any similarity whatsoever in the things I talk about, because I know for a fact that these things are true. They are very generic things that repeat over and over again, but it is opposed to 99.9% of everything else all these other educators are using to justify why they take a trade. And I'm not talking about just foreign exchange traders or educators. I'm talking about stock traders, stock option traders, and commodity futures traders. All of them, for whatever reason, believe that their retail tools are the things that make the market move around. Their indicators, push price, that type of thing. And me personally, I get a lot of flack because I stand out here all the time and ridicule everyone else. As soon as they put an indicator on their chart, you're telling me that you don't know what you're doing. And that's just the bottom line. And that really rubs people the wrong way, especially if they make money. If they make money, they swear that that's the reason why the market's moving, when it's not. It has nothing to do with why price is going up or down. Your indicator readings have nothing to do with it. So while I admit early on when I was a commodity trader and I was neck deep in indicators, I had indicator-itis, I was always looking for more indicators to add to my chart. It was unsettling for me to realize that there's a way of looking at price and reading just price without any of that stuff and nonsense, really, and then come to a better, clearer understanding of what price may do in the future. Now, I'm not perfect. I'm not 100%. I am not going to stand here and say I'm 100% accurate. But I have a very large community, and they watch me do this every single week. I have to co-sign and basically say what I believe is going to happen in the marketplace. And I'm only following predominantly the dollar index, the euro dollar, and the pound dollar. Now, occasionally I'll go in and I'll talk about other markets in the E-mini S&P, or maybe the bond market, or another pair like the Aussie dollar and such like that. But I'm mainly looking at a very small universe of markets to look at, okay? And many times it's just those 3 pairs, or 3 markets rather. And it isn't what everyone wants it to be when they sign up with me. Whereas if you look at my free content, you see me referring to all kinds of things and all different kinds of pairs, and you naturally assume that I'm in here trading 18, 20 different pairs. I'm not. I think that a trader should be focused and limiting their focus on one particular market, maybe 2 at best. But I use the dollar index as a barometer to kind of like filter whether or not I should be a buyer or seller of euro or pound. Now, I have an opinion like everyone else, okay? And I have been very strong-willed in the past when I was a younger man, and basically stood in front of everyone and beat my chest and said, come at me, bro, and see what you can do. And nobody really did that in the past, and it's still like that today. And I think majority of the reasons why is because most of everyone out there on social media aren't really profitable traders. And because of the economic turn, because of all of the illness things and economy, taking a dive because of all that, people are really looking to do whatever they can to make money. And on YouTube, it's all about views. It's not about followers, it's about views. And if you can get views and you have ad revenue attached to your videos, then you'll make money. Now, admittedly, I put ads on my videos and I make a little bit of money. It's not a lot, but it's something that gives me money to give to my children if they want video games or things to do with each month. But I certainly couldn't live off of it, let's put it that way. I don't make it a point to always go after someone else. I have in the past because I felt it was warranted, and I could have made this YouTube channel a let's expose everybody else. By contrast, here's what I can do, let's see what you can do. And it's just, nobody cares. Okay, really. The people that you're going to call out, they're not going to be moved by it. They're not going to be compelled to, show you their evidence that they can do what they're doing. And I believe they can't really. I mean, that's really what it boils down to. But when I see other people doing this growing trend of, okay, you're an educator, and their videos are predominantly just calling out other people as a scammer, and they themselves have a service or a course, and they're not really teaching you anything on their YouTube channel. They're just basically saying, hey, you all suck. You are a dumb sheep. You are a loser trader. I bet you lose trading. Show me your statements. And the bottom line is this: where is the content in your YouTube channel that warrants anybody's interest in you at all? Because at some point it becomes simply a shouting match, who's bigger than the next. And to me, I've always put a lot of my time and effort into providing content that you as the viewers can come in, look at it, study it. If it doesn't resonate with you right away, then hey, no harm, no foul. You didn't lose any money, and you found right away that I'm not your cup of tea, and there's no real interest in pursuing anything with me. That's great. I have no problem with that. I have always openly said I'm not the mentor for everyone. My personality, my opinions on things are going to be very polarizing. And sometimes that creates this tribal or team mentality where it's team ICT against the world. Okay. When it's not the team, it's me against everyone else. Because what I see out here on YouTube and what I've seen on Instagram is a lot of phony fakes. Okay. And I get called out as a fake a lot. Many of times it's from people that I have called out. They create sock puppet accounts and they'll go in and they'll make comments and make things up about. I mean, you can go on the internet and look at pictures. People think I live in specific houses that look like they're run down and dilapidated. I don't live at these places. But that's the level that these people will go to. And there's another YouTuber out there just recently put a video up, said I'm running from the feds, and that's the reason why I don't show my face. I've tweeted my picture. I've tweeted things that are clearly me. It's me, and I've posted pictures of myself on my YouTube community tab. I don't think it's something that anybody should be interested in. Who cares what I look like? But for whatever reason, I guess people get really fascinated. They want to know what you look like. But when you make malicious comments and say, hey, look, I think this person's a scammer because why? You didn't see me show you a live account? Because you don't see me showing you my statements? I never came out on this platform and said, I'm going to show you trade signals. Because if I did that, then I would be more or less obligated to do that. Now, there are other YouTubers out there that sell signals, and they themselves don't prove that they can call trades before they happen. So here's the thing, and this is kind of like my call to arms for all of you out there that are doing these YouTube channels that have a course and a service of your own, but you're also more active as a scam alert. Okay, this person's a scammer, this person's a scammer. So you're basically trying to make a name for yourself by calling other people fake. Now, I can go out and say, hey, this is what the market's going to do. This is where it's going to go to. It's going to trade there, and call that before it happens. I can do that every single week. Every single week I can do that. Now, I cannot do that every single day with 100% accuracy, but I know when I can pull that trigger and do it. I have looked at all these other channels, and while they may say, here, I'll show you my broker sign in into my login, and here's my TD Waterhouse, here's my Tasty Trades account, whatever. That's not the same as saying, here's what I think the market's going to do, and then watch and see what happens. That's what I do in front of thousands of people every single week. Now, if I was a scam artist and if I didn't know what I was talking about and I failed and I was fake, I would not know what the future's going to likely do. And I'm in a 90% bracket with my analysis. I'm not operating as a signal provider. I don't tell everyone where to get in, where to get out. That's not what I do. As a mentor in my mentorship program, I use what is fastly becoming 3 decades of experience. I help my viewers and students in my mentorship navigate where the market's likely to go to next. They are taught these price action setups conceptually, and they're given rules and they're given criteria to anticipate these types of setups to form in specific market conditions, whether it be bullish or bearish. But if the market is in an uncertain period where it's most likely not going to go anywhere, or it's highly unlikely that a high probability trade would form, then I lean on my experience and tell my community, hey, I don't think this is something we should be messing with right now. Let's just sit on our hands. But in case it does move, this is what I believe it will do. And in those instances, I'm more apt to being wrong. And I tell them up front, this is an area where I'm probably going to be wrong, but I have to co-sign every single time, 2 times a week when I sit with my community. But I see all this growing interest in calling everybody else out. And it's like these YouTube channels that came up years ago, and you still have them today, but they'll watch other people's video and put their mug on the screen like we want to see who they are and what they're doing, and their reaction. They call them reaction videos. And I can't stand it. That was one of the things about YouTube I hate. Okay, I can't stand that, because what you're basically saying is, I have no skills, I have no talent, I have no reason to be on YouTube, but let's just watch another video and watch me carry on like a fool. To me, that's what I see when I see other educators and other signal providers point fingers at other people. Because if you are that good, people are going to recognize you on their own merit. I don't advertise. I don't go around and making YouTube videos about other YouTube videos, okay, or YouTubers. I go on social media in the past and went right to their accounts and said, hey, can you do this? Hey, can you do that? That I've done that. But for YouTube to do that, it just seems really lowbrow. And this is my opinion, and I'm certainly welcome to it, just like everyone else. I'm welcome to look at what I'm saying here and say this is nonsense and wasting my time. But this video is really just for the people that are constant viewers of my work. For someone new, maybe this is the first video you watch. I mean, you're probably saying, I ain't got time for this guy. It's not a big deal for someone to have an opinion, okay? But to make your entire video library all about calling everybody else a scammer, and then when you see other scammers calling other people scammers, you don't want to have that heat on you, and you say, well, I believe that person's highly intelligent. I believe this person is a good orator, when everything indicates that there's a contrary view that's easily grasped than to believe that. And that's what I'm seeing. So I'm waiting for this next YouTuber to put their opinion out about me. But I would counsel you all, if you all have that interest in me, you want to do something like that, go through all of these videos. Because if you don't go through every single one of them and watch every single minute of them, your opinion doesn't matter. Because you're talking about something you don't even know. Namely myself. You have no idea what I talk about. You have no idea what I teach. So why should your opinion about me or the asset class that I prefer, because I've done stock options, I've done stocks, I've done commodities, I've traded bonds, I've traded metals, I've traded coffee, cocoa, corn, soybeans, soybean oil, soybean meal, lumber, copper, cotton, sugar, orange juice futures, pork bellies when we used to have them, but you can't trade them anymore. So folks, I've done all this stuff. Okay, I've done all of it. I've been around the block for a long, long time. I prefer Forex for one specific reason. It allows you to form fit risk management. Now, what does that mean? Every asset class, no matter whether you're a stock options trader guru, okay, or if you are a commodity trader or an index futures trader, a crypto trader, foreign exchange trader, it does not matter. Every single one of these asset classes incur risk. If you put your money at risk in my opening a trade, there is a vacuum of risk-free trading. There's always risk. Always risk. There's no way to put a trade on and not have, at some point, some initial measure of risk. So as a speculator, whether you're trading any of these asset classes I've mentioned or the one I settled in on, you always have to deal with risk. So what I use as a medium is Forex. Now it's got a bad name. It's got a bad rap because years ago when foreign exchange became popular, you had bucket shops open up and they were doing some really unscrupulous things. They were just running the gamut on everyone, opening the spread 20, 30 pips. I mean, it was madness. Okay. And admittedly, I got caught in some of those bucket shops. Okay. Because when it's first introduced, you think, wow, I'm going to go with that broker. I'm going to go with that broker because everybody was new at that time. No one had a track record. And I got hurt with FXCM and they ended up paying out a settlement to other people and clients of theirs. And then the U.S. kicked them out. They said, we can't use you in here. You can't operate in the U.S. While they're still operating in other countries, they're not allowed to be here in the U.S. So all of that helps paint this tapestry of Forex is impossible. It's impossible to make money. Everybody loses money trading Forex. Well, I got news for you. Everybody loses trading stock options. Everybody loses trading stocks. Everybody loses commodities. Everyone loses Forex futures index trading. Every asset class loses money. Everyone loses money. Everyone, as a new trader, is typically going to blow their account in any asset class. So it's kind of myopic to go out and just say, yeah, all foreign exchange or Forex day traders lose money. Okay. And to hear someone say, it's been scientifically proven that foreign exchange day traders lose money. That supposes that you have access to every account on the planet. And folks, that's not happening. Okay. It's like the presidential election, and all these supposed polls, who's ahead, who's not. It doesn't matter what these polls say. What matters is you, the trader. So if you're thinking that foreign exchange is impossible and to never consider doing it, okay, and you haven't gone through my YouTube videos, just do that. Because I promise you, I guarantee you, if you go through them, you're going to see things taught that other educators simply just don't know about. They're becoming fast learners because they're taking the things that I teach here and in my mentorship and revamping and renaming them so that it looks like something that they came up with. But I've been around enough people who are starting to see it and they can call them out now. You are the only person that matters. In this industry, there are opportunities for you to test the theory without putting any money at risk. And you can do that with paper trading, which is hypothetically saying, I would do this, I would do that. I think the market's going to go up here or it's going to go down here, and it costs you nothing. There's no risk in that. And it's valuable insight. Then the next stage is to go to a demo account, and you trade with a demo account, and you use the things that you learn conceptually and practice in paper trading without actually entering pseudo or simulated entries with a demo account. And you train yourself to view the marketplace, to submit to the amount of time that it takes for these formations to complete. And also when they fail, you need to learn a lot about yourself. That's the unfortunate thing that most educators, because they lack experience, real experience, they don't have a clear understanding of the huge chasm of experience that you're going to need to bridge from the beginning, first day, when you sit down and say, hey, I'm going to be a trader of whatever asset class. And then when you arrive at whatever it is that you're going to do as a repeated model that you have faith in, it's not 100%. Nobody has a 100% trading model. No one, I don't have it. No one else has it where you're 100% accurate. Never. It won't happen because you're going to do something. You're going to do something that's ahead of the time you should have done it, do it too late, do it too much, or miss it entirely because you're human. That's the element of trading that no one can really factor in as an educator, because we're all going to do something impulsive, or we're going to be very lazy, or we're not going to be responsive to the things that the market's telling us at the time when it's flashing it across the screen. So if you have this test run and proof of concept, where it didn't cost you any money, it didn't take any money out of your pocket, and it didn't have to require you to open up an account with any specific broker, you learn right away that there are things that repeat, and then it builds your confidence. And over a period of time, and how long will that be? It's completely unique to everyone. No one has a trading plan or a course that says everybody makes money under my teaching by this day, because if you can prove that, I'll pay you $1 million. And I got it. Everybody out here cannot be scammers. Okay, everybody out here that is an educator and trader can't all be a scam artist. They can't be. Okay, now there may be a plethora of them, and I agree that there is, but there are real people out here that are turning money from the markets. And for you to say that person's a scammer, why? Because he's not showing me his personal information. How is that relevant to a skill set that's transferable? Because what you're saying is, unless I provide to you something that you're not entitled to see anyway, your opinion is paramount to everything else. And since you say that they're a scammer, therefore it must be true. That is a really distorted perception of reality. Because I believe if someone knows how to do anything in trading, and they can do it with a pseudo or simulated account, they are proving a concept. Now, how much money that person, he or she, may make with that skill set, I don't care about that, because I understand mathematics. And if I can see a reoccurring pattern that repeats over and over and over again, whether it be in Forex or whether it be in stocks or whatever, and the things that I teach are price action related. That means you can take this to a stock market chart. You can take it to the commodity markets. You can trade it in foreign exchange. Some of my students swear by it working in crypto. I don't personally have faith in crypto. So I have been very vocal about that asset class, and it's going to require a lot of things for me to ever really warm up to it. But I have a strong opinion about that. And I can see why other people still hold on to the idea that is very similar to how I view crypto. I have had times where my analysis, and I've been public about it, I talked about the crypto market crash of Bitcoin at 20,000 right before it went there. The day before, I said it's not going to 20,000, it's going to crash. It's going to go down to 6,000, and it went there. Everybody saw it. I was getting laughed at, okay, but it is what it is. But I have been wrong more times in my analysis with crypto, so therefore it doesn't fit the models that I use to trade real currencies or fiat currencies. So until it does those similar things, I'm not going to touch it. If it ever does, then I'll probably be very active talking about crypto. But until then, that's the reason why I don't touch that or discuss it. I can see the opinions of other people that trade the futures market and say, I would never touch Forex because it's scammy, okay, or it's this, it's that. And it's not that it's any different than the foreign exchange and futures. They're basically the same. They're basically the same. The only difference is the futures market have a expiration. Their contract month expires, whereas the spot market just is always right now. What's the market right now? That's your cash price. So, for instance, if you're looking at this chart here, this is the euro dollar, and you probably thought your chart was frozen, but I gave you a lot of introductory jawboning just to make the case for why I think the way I think about what I'm about to say. And then you as the viewer can go along with what I'm saying or disagree with it or agree with some of the things and disagree with other parts of it. It's up to you. And I really don't really care, because this is one of those videos where it's just an opinion. And it's not something that I'm trying to convince anybody to do this or do that, because ultimately I teach how to trade price. And I tell my students, don't trade Forex if you want to trade futures. If you're more comfortable trading with what I'm teaching you in Forex, if you're comfortable with it in the futures market, then by all means do that. If you like what you've learned under my tutelage and you think that you're more apt to being successful and comfortable, which is important, you have to be comfortable with the asset class. You cannot be a mentor or teacher and grab everybody out there that comes under your wing and say, I'm going to press you into my mode. And my mode is the best mode. Nobody's going to be able to beat you if you get pressed into my mode. I have lots of modes, okay? But they're models, not modes. They're just foundations that you are going to have to bring your own unique personality to, and it has to match also. And if it doesn't, you're going to have to keep studying my concepts until you find the thing that matches. And I have lots of them. I have a lot of moving parts, but not every model or trading approach has every facet that I teach in it, because then it's impossible to make a decision. But if you are learning from someone like me, that I am well versed in all of these asset classes. I know exactly what I'm talking about. I know what I'm looking for, and I know how to educate other people and transfer the information I know about them to them. But I'm also a realist. I know that I can't press someone that is really geared towards trading stock, even in the share capacity, not the option, just the shares alone. I have students that want to do that and don't want to trade Forex. I have other people that came to me as stock traders and said, you know what, I prefer Forex. It makes more sense. Are either one of those students / traders right or wrong? They're neither wrong, and they're both right, because they have adopted a mindset about the marketplace and what they're going to do to engage with it. And it's in an asset class that is comfortable to them. You can't force everybody to be a day trader. I know this as an educator. I can't force people to use my short-term trading models when they are really predisposed to be position swing traders. That's experience. That's something that all of these other educators out here are trying to do the opposite of. They're trying to say, okay, I have this magic trick. Okay, I have these lines that you can put on your chart, and this is how it works. And if you only do this, you'll be successful. And sometimes in the past, people have listened to me, and in my dialogue, I've said, everything else sucks except for what I teach. And I believe that wholeheartedly, because I cut out the retail stuff, because all that retail stuff is intended for you to lose money. Okay, you're going to lose money if you follow that logic. You're going to lose, guaranteed you're going to lose. You're going to lose with the things that I teach too, but you're going to understand when you're likely to lose, so therefore you do nothing. So that was one of the big things for me in leaving retail logic, is I need to know what makes me lose money when I've lost it. And it was always with indicators. Every single time I can find some root cause to that indicator or a pair of indicators I was relying more on instead of the price action. But you don't have to worry about listening to someone like me saying you only trade Forex, because I'm a realist. I know that the things I teach also work in all these other asset classes. And you are welcome to go into any of those asset classes and thrive there, not struggle, do very, very well. And it doesn't diminish Forex. It doesn't make another asset class better than the other. It just means that that trader has paired up a model or trading plan with an asset class that they're very comfortable with, or they've grown to be more comfortable operating in. So if we look at this chart here, I know I got off on a rabbit trail, but I want to make sure you understood what I was saying. This is the euro versus the US dollar, and this is a pair that's trading on many platforms out there. Okay. And there's a big push by people that are opposed to Forex, and they're saying that everybody that trades Forex is scamming. And anybody that's teaching is scamming because they're using MT4. Well, this is not MT4. This is TradingView.com. And you as a trader can use platforms like Forex.com, which is a regulated broker in the United States. Yes, it can be traded through MT4, but this is not MT4. You can trade with Oanda, which is another regulated broker in the United States, and they operate through and can be traded through MT4. I left MT4 to show everybody that what I do and what I talk about doesn't rely on what everybody else out there that are real scammers. And the list is long. I'm not going to sit here and go through the list of who I believe is a scammer. If you've been with me for a while, you pretty much know who it is. But I moved away from that as soon as it was common knowledge. Everybody's seen it for what it is. I mean, we all knew that it was likely to occur, but I didn't know how it was done. But now, Adam Webb from Macro Hedged, he made a video series or a couple of videos and put it out on Twitter, and it's made its way in all around the community. And even back then, he himself was insinuating that I was doing that same thing. And listen, I have never done that. I wouldn't even know how to do it. Okay. And to prove that, I moved away from MT4 and I went to TradingView, because my community, I asked them all, I said, look, what's the best thing right now that would be opposed, or as far as I can possibly get away from MT4, and then prove that what you're learning here is just price. It doesn't matter. I don't need to use something to gimmick my results. So I do executions and I teach from this platform. This is exactly how I teach. You can see it up here, mentorship, commentary. That's the template I use. So when I'm teaching and I'm talking to my students, and even when I'm making my YouTube videos, this is the platform I'm using. So I'm not doing anything with MT4. It's not dependent on that to be quote unquote successful. But this pair, if we were looking at this euro versus the US dollar as a commodity, it would be seen as this. Okay, this is the same 15-minute time frame, but this is the euro futures contract, and it's the delivery contract month of December 2020. Now I want you to look at this price action in here. Okay, see this price run there? This is a pattern that I teach, and you can actually find this pattern on this YouTube channel. You don't have to pay me for it. It's taught for free right here in this YouTube channel. Okay? What makes this futures contract any different than this currency in Forex? Now, you probably don't see the actual market move that I'm showing you on the futures contract chart. I'll get to that in a second. But this fluctuating higher and lower, it's basically the same underlying market moves. There's a slight difference in the delivery, but it's not so gross that I would never trade that. For instance, let's just say, for instance, that this old high here, you felt that price could eventually come back down to that and act as what we'll call classic support resistance. Now, I don't personally subscribe to that. What I'm about to show you, there's other things, and I teach these things in this YouTube channel. But we'll just keep it very simple and say that high right there, you're going to view that as resistance broken, and then maybe it comes back down and gives you kind of a reaction to trade off of. So we're going to scrub forward in time, and you can see that same price action move. Let me take it off so you can see it clearly. Okay, all of this is the foreign exchange pair, euro versus the US dollar. And here's that same move in the futures contract for the euro. There's no difference in that. It's the same thing there that it is here. It's the same price swing. So why do I prefer Forex over futures? Well, if you were looking at this market here and you were only going to trade the futures market, if you're trading with futures, if you go over to the Chicago Mercantile Exchange, this exchange gives you your margin required to trade the euro futures. To trade that, you need to have $2,900. per contract. Now, that's a standard lot. So you're looking at controlling $125,000 worth of the currency, or what we would see in Forex, the equivalent of $12.50 per pip. Now, they do offer minis, and the leverage goes down to 1,450, but even then, it's still sometimes out of the reach of developing traders. So, and I also state when it's appropriate. And when is it appropriate? When the student decides. I never tell someone you're ready to be trading live funds, because frankly, that's financial advice, and I don't give financial advice. I give price action education. Now, there's a strong difference between that. Okay, if I made this YouTube video or this YouTube channel, or I sold my mentorship as a trading signal providing service, okay, or follow me type trading, then yes, I would absolutely be obligated to provide a track record to show it with live funds and have to be licensed to do so and be a commodity trade advisor. None of those things I'm interested in, because not because I can't do it, but because it's such a tedious thing. And also I have introduced an element that I am completely opposed to. Just look at the world today. Everybody's blaming everybody for something going wrong, and nobody takes personal responsibility. So in trading, if you've been in this industry at any length of time or ever traded with live money, you know exactly what I'm referring to when it comes to responsibility. When you lose, you want to blame the broker, you want to blame the report that came out, you want to blame the platform, you want to believe the methodology that you're using, you want to blame the person that taught you, or you bought the book from, or the course from, or the person you copied and had no idea why you were taking a trade, but they got a big following on social media. They said they were buying this and they were selling that, so therefore you did it. And when it doesn't work out, who owns the responsibility in that? Now think, and if you were honest, you'd be saying you have in the past looked to other outside sources for responsibility. You don't want to take the responsibility for that. But when you win, if all those things were equal and you looked at other things to influence you taking that trade, it wasn't your decision, something else made you take that trade. When you have that happen and it wins, who gets the responsibility for that trade? Well, naturally you do, because guess what? You've made money. And the people that you've copied, or the people that gave you the inspiration or told you basically what to do, they don't get the credit. They don't deserve that credit because you made money. So your subconscious is saying, you're smart, you made that money, you deserve all the respect and adoration. And you own that responsibility. If I was an educator that said, oh, we're going to do this with live funds, and someone does something wrong, because it's going to happen. I mentioned it earlier in the video. You're going to hem and haw. You're going to wait. You're going to think, oh, he said he's buying. Let me see if it's really going to start going up. And it shoots up 20 pips. And then you buy. And then once you get in, there's a natural retracement of 12 to 15 pips. And that can happen, and that's perfectly normal. But you start freaking out, and you can't stand it. You get out of the trade. You lost. And then the trade goes in the intended direction. Who are you going to fault? Who's going to get the responsibility laid in their lap when you lost money? The person that taught you. And I am not subjecting myself to that, because human beings by nature are pathetic individuals. Okay, they're just nasty creatures. They don't take responsibility for anything. They aren't considerate by nature, and we are all monsters pretending to be pleasant. So I would never open myself up again to telling people, because I've done this in the past, but I would never do that again. And that's the reason why I make it very clear to my community that what I teach is price action. That's it. I'm not going to give you trades. I'm not going to tell you when to buy and sell. And I want the people that don't like that to scoff and walk away immediately, because that's exactly what I want. Because that mindset, I can't help people like that. The people that come to me and they say, you know what? He understands risk. Because for me to operate as a trade advisor when I'm not licensed to do so is considerable risk. And I like my students. In fact, I love them. I care about them. And I'm not talking about just the mentorship people that pay me. I'm talking about all of my students, because you trust me enough to give me your time. And time is extremely expensive. And I'm honest, and I tell you all, right from Jump Street, this is going to take you more time to learn than you want it to. It's going to be more time involved and more work than you ever imagined. But if you stick to it, you will be able to operate in these markets with a level of precision that is unrivaled. And I don't care who tells you otherwise. Now, does that equate to making money? Truthfully, no. That's not the same as profitable trading. But you cannot reasonably expect to trade profitably without having a model that is well written, designed, that you understand front to back. You know exactly what it is that you would be doing, when you won't be doing something, when you have to wait, how you are going to manage risk. All these factors, they cannot be minimized to a couple-hour video course. You can't do that, folks. You need to see what it's like to be in a setting where the markets are not likely to do anything, or, as I teach it, seek and destroy, where it just goes up and down, chops everything up, and it may look like there's setups there, but it's not. And that's experience, and that's what I present as mentorship. I am a guide. Everybody learns my concepts and tools, and then I say, this is what the market's likely to go to next. So therefore, you immediately remove the idea of half of the things that you learn and only focus in on that side of the marketplace. And then you look for the pattern that you like most. And I can show you dozens of ways to get into the same price action move. It doesn't mean one's better than the other. It just means that your eye, as a developing student, is going to be drawn to one particular approach to trading, the same price action move that's occurring in everybody's charts all around the world. We have different ways to interpret that price action and get in. We don't have to be into the lowest low. We don't have to be in, at any one particular level, or we've missed it. Like many other ways of trading is, like, if you missed their setup, then you have to sit on the sidelines. We don't have that problem. And we're not chasing price to do it either. There are things that are very logical, and I explain this, but you can't learn it all in a couple videos. And you can't learn and rely on your infancy as a trader and expect the results that you want by joining a service. In other words, I can give you an AR-15 and say, hey, here you have an AR-15. You are loaded and deadly. But it would be irresponsible for me to do that with any of you and let you run around, because you'd be shooting yourself or shooting other people and not hit your target. Many of you would be afraid to pull the trigger. The recoil of it would scare you. So you have to work with knowing what it feels like to hold the firearm without any ammunition in it. Holding it, cleaning it, taking care of it, sighting it up, and then getting used to that. And then at some point you get ammunition. And I know some of you are probably anti-gun. You're thinking, well, this is probably not the best example or analogy, but it's the first thing I went with, folks. Give me a break. The point is this. If you are a trader in the making or aspiring to be, you have to be under the tutelage of someone that knows, number one, how to do it, and has a ability to be more right than wrong. And if they can't show you any substance to why they believe the things that they do and teach are, number one, true, there's some substance to it. It's proven valid. It's not a conjecture. It's something that can be seen, back tested, measured, how often it creates and forms. That's what I've basically posed to everyone in this YouTube channel. I've put out content, I put courses together, and it's information that every single person that's ever really went into it and rolled their sleeves up and said, I'm going to get into this, they have become addicted, because it's something that they can see in their charts now. That doesn't mean that they're in there buying and selling and killing it right away. It just means that they understand what's likely to happen next, and they're developing more of an experience and an understanding of what it is that should take place. That's that submission to time. And it's going to be different from all of you. And many times people just are completely opposed to that. And they are just like, I want to learn how to trade. I want to get through all of ICT's videos. And the common thing is these lazy folks, okay, they sit around in chat rooms. They're all like, hey, can you just show me the video? Or where's the video, and what part of the video ICT talks about mitigation blocks? I just need to know where the order blocks are. Those people will never make it. And to me, I think that's what most of these reviewers, okay, that are doing it, they're failed traders. Okay, they're traders that aren't doing very well, or they may modestly make money here and there, but they're trying to push their service, because if their service was any good, it would grow organically. And if you're trying to make a case to say, hey, look, this person's fake, that person's a scammer, that person's a scammer, and oh yeah, by the way, I do have something for sale too, but you're not giving anything to the community to weigh that out of any value, it just looks poor. It looks really bad. And it's not my opinion. It's just common sense. How many times do you need to be saying someone else sucks and you not provide anything to prove there's any real reason to listen to you? So I just pose that as a means of personal reflection for everybody out there that's doing these types of things. If we were looking at trading this same euro trade, okay, and we wanted to do it with foreign exchange, I don't require, and a trader out there would not require $1,450. Let's say the person doesn't have that much money. They're on a very low budget, but they want to slowly add to their account. Maybe they made up a budget where they can add $25 a week, or maybe $25 a month, because they're just simply not in a position where they can afford to do it. Let's be honest, folks. I mean, look at the state of 2020 right now. A lot of people lost their jobs. A lot of people lost hours of their jobs they still keep. So, everybody's been affected by this. I have an affluent lifestyle, but I still have been affected. I'm taking care of family members that I didn't normally have to take care of. And I'm not complaining. I'm honored to be able to do so. And I'm glad the Lord has blessed me so I could do that. But not everybody can afford to trade these full futures contracts. Not everybody can afford to meet the minimum thresholds of these brokerages. Everybody says, you got to be on a regulated platform. Well, Forex.com is a regulated platform. It's regulated by the Commodity Futures Trading Commission. How much more regulated you got to get? I mean, they're regulated. Let Forex.com do the things that FXCM did and see how long they stay in business. It just isn't going to happen. They understand, and they made an example out of FXCM as a Forex bucket shop. So if you spent the time to learn how to do the things that I teach on this YouTube channel, or even in the mentorship, but you don't have the money to pony up to do a trade like this in the futures market, what can you do? Well, Forex.com, if you just simply Google this, I'll put this on the screen so you can see it. Okay, it's amazing how many people have all these ideas or opinions, but they never even used Google. Okay, it's crazy. But what's the minimum deposit for Forex.com? Well, the minimum initial deposit required is at least 100 of your selected base currency. So if you had $100 in the United States, you can open up an account with Forex.com. And I know right away some of you are like, what's $100 going to do? Well, first of all, if you ever make the transition from trading paper to demo to live trading, that's a huge jump in mindset. Whatever you've done in your demo account, that's just preparing you to follow rules. But now you're going to really start learning, because there's money involved. And what happens is you want to use the least amount of money as you possibly can. Period. End of story. That's the way it is. Now, I think personally, if anybody ever traded with live funds, they should do so with about $300. $300 is 3 times what the minimum is. And why 300? Because you're going to make a lot of mistakes. You're going to look at taking a trade, and say the first trade you take and you're only trading at 10 cents per pip. Okay. If it moves 30 pips in your favor, you've made $3. Now that $3 is not going to change your lifestyle But if you lose $3, it's not going to change your lifestyle either. But guess what it's going to do internally? You're going to hate the fact that you lost. And then you're going to be tested because you're losing real money, but you're losing too. And now you don't have $300 in your account. You have $297 in your account. And there's the first test. Can you assume a loss and it not wig you out? Are you losing your mind, having a conniption fit because you lost on that same trade that you would have lost on a demo account, but it didn't feel like anything? But the rules say take the next setup with this, and this. But when you now have money in there, it becomes very competitive. Where it's not competitive as a demo trader, it's highly dependent on you performing exceedingly well when now there's money. And that's why I don't believe that people learn conceptually and get to the point where they're so bored with finding the setups in demo. That to me, I think, is the deciding factor when someone would ever consider taking a leap from demo to live fund trading. When you can consistently find setups every single week, not every day, because day trading is not everyday trading, but when you can find setups that repeat over and over and over again, and you're able to find a few of them each week, and you're bored while you're waiting for them, and when you engage them, you're indifferent to whether it works for you or not. You believe that it's going to work, but you're indifferent to the outcome. You don't really have an opinion whether it's a good thing or a bad thing. It's just another transaction. It's just like going to work. You're doing it because this is the process. You go there, do your task, and you come home safely, and you do that for 5 days in a row. Generally, you get a paycheck at the end of the week. Okay, it's that process, that mindset. But you just don't have that when you go from demo into live account trading. Even no matter how small the account balance may be at the initial start, that transition creates a competitive switch in your mind that, hey, now it's game time. And we may laugh and snicker and think, we're talking about 10 cents per pip. It's nothing. It's insignificant. Wait till you do it. Wait till you do it. That 10 cents per pip is going to feel like $100 to you in terms of being right or wrong. You want it to be right all the time, because what's going to happen in your brain, okay, all these little chemical responses are going to start firing off. And when it's moving in your favor, even if it's only up $1.50 or whatever, you're going to be like, yeah, because if this was $10 per pip, that's the stuff that people go through. And they rush through that part and they blow their account. And they're part of the statistics that most traders, not all, most traders blow their account in the first 90 days. Most of them actually in the first 30 days because they're not equipped to deal with the competitive nature of live fund trading. Who are they competing with, by the way? If you trade with live funds, who are you competing with? They'll say, oh, you're competing with the broker or you're competing with the smart money. You're competing with yourself because you can do everything right. But if you don't have the mindset correct and you think about what you're doing correctly, it'll be self-defeating. You'll destroy yourself and blow the account out. You have to have a very clear idea about what it is you're doing and do so responsibly and starting with the least amount of money. And while this example and suggestion on my part of $300 is not the minimum because it's 3 times that here, it just gives you wiggle room. Okay, but let's go back and look at this Forex pair here, and I'll add the annotations back. And let's just say you were using my optimal trade entry pattern that's taught freely on this YouTube video channel. This level here, optimal trade entry between 62 and 79% retracement level, and you add the spread to it. We added 5 pips for this example. Buying here using a 15 pip stop loss. Your $300 account, if you got stopped out and went down to here, would be sitting at $297. But if it goes to your swing objective of -3 on the fib, and you learn this also on this YouTube channel for free, if it gets to that level, and it does so here, you would have 4.5% or a little bit above that. So that might not be a whole lot to see $13.72 on one trade. But that is 4.5%, folks. You realize that if you just did that every single month, you would be killing it by all industry standards. But that's not what's taught to people in trading. That's not what is taught by Forex gurus. They're taught that you have to double and triple your account. You got to flip your account weekly, monthly. And while that is possible, it can be done. It's not something that you should aspire to do. Because if you can consistently build this kind of return using relatively low risk, I mean, if you look at what's being shown here, the risk is 1%. The entry price is this. The stop loss is this. And the target is here. $300 is the account balance assumed using 1% risk. I think anyone starting out trading with 2% is nuts, because you're assuming that you're way better than you really are. And maybe in this example here, 1% is probably still too high. In fact, it really is if you're a new trader. But you have to grow accustomed to seeing risk. You have to see it and handle it, work with it. And it might not be exciting to see it like this, but this is how you grow. This is how you build it. And this same 4.5%, if you get to the point where you can grow to a $100,000 account, that's 4.5% or $4,500 for that month. And if you do that consistently every single month, or net that afterwards, in other words, after you go through your win and lose cycle that everybody goes through, your results would be way above standard expectations. This industry, they would consider 20-25% a year a banner year. Like that's it. That's a phenomenal rate of return. And to put down something like this, when it's just one intraday day trade at a level that makes logical sense to get a bounce, you're not trying to call the bottom of the marketplace. You're not trying to capture 1,000 pips. You're just trying to get in there, take a surgical strike, and then get out. Who could complain that this would be a bad return or rate of return? It's at a time of the day I teach, which is London Open. It creates the high or the low of the day there. If it's a bullish likely scenario, then it's probably going to perform the low of the day. Don't take my word on that, folks. Don't take my word. Go into the videos and you'll hear me teach that at length and at detail. But to listen to other people say their asset class is the best and everybody else's sucks, or specifically Forex, that's too myopic of a view. And that to me just speaks volumes about, number one, them as a trader, and immediately raises the question of what's the ulterior motive here. Okay, because if I hear someone that's highly opinionated like that, they're selling something. Okay, they're selling something. They have something that they want you to think is superior to that. And the folks that I have brought into Forex by bringing their interest into Forex, the majority of them would never consider listening to anyone else, because the things that they see me teach them, they're easy to spot, they're generic, they repeat over and over again because it's based around the market themselves. You are not going to find the signatures in price to the level of that is found in Forex. Forex has these characteristics that are very, very, very specific. Now, a lot of the generic macro elements are applicable to stocks, commodities, crypto, metals and all that, and oil. But Forex has these little signatures in price that repeat over and over again that are very specific to it. And when my students see this and then they start testing it in hindsight, and then they find going forward using the rules that it just like it's supposed to be. It's like it's completely scripted, because it is. All of these markets are scripted. They're controlled 100%. that's unsettling. That bothers people when they hear it and they think, oh, he's full of mess. It's $5 trillion industry. How could it possibly be controlled? Well, my counter argument would be, why would any country leave it up to speculators whether or not the currency is going to stay where it's at? Think about it, folks. It's just common sense. Maybe this is something that would have came up if we were friends and you came over to my house or I came over to your house, and it was just a conversation about what people think and how my opinion fits in all of that. And my opinion, let's just be honest, my opinion doesn't matter. My opinion is my own. My belief is people should have an objective view and a certain measure of tolerance. Okay, while I believe everybody else trading what they trade is something that I would never ever do. Like, I would not rely on retail logic. I would not trade certain asset classes like crypto. But I understand and respect those people that do it because they have found some way of doing it. And who am I to say if they're making money or they found a niche in that? What business do I have saying they're stupid for doing so, or they suck, or they're a scammer? I'm not spending their money. I can't spend their money. And I know that they're not going to spend mine. So what difference does it make? If someone has anything of value and you have a YouTube channel, share that good stuff. Now, you don't have to give all your secrets if you have a service, but put out there, a little bit to let people see that your opinion should be even considered. Because in this industry, we all know that it's toxic. It has a lot of fraudulent activity, people pretending to be profitable when they're not. And I stand on the basis of price action. That's it. That's what I do. And sometimes that completely rubs people the wrong way. If you're so good, why don't you show me your bank accounts? Why don't you show me your statements? And why don't you show me a live account? And why don't you do this? How about you just watch me call the markets? Okay. If I couldn't outline something, or anyone for that matter, couldn't outline in detail with specific concepts why it should do this or that in the charts, and it doesn't come to fruition, doesn't that pretty much say what it is that people would need to know? That there is no validity to the things that you're peddling. And that's why I put so much effort into my videos. Before I created this mentorship, I wasn't selling anything. I was just trading. But when I saw people around the world taking my free lessons and then selling them to people, that really got under my skin. And I have a lot more to teach, and I just didn't want anybody else getting credit for something that was gifted to me. And it took a lot for me to get this, to learn how to do it, and I've been blessed to receive it. But nobody deserves the credit apart from me, because when people come to me, I may say I believe I'm the best trader, but when I say that, I want you to clearly listen to me, okay? When I say I'm the best, it's not because I myself made myself the best. I believe I'm equipped by God. I believe everything that we receive in our lives that is good comes from Him. Now, you may not believe in God, and that's fine, but I do. And I don't go after people that say they don't believe in Him. I believe it's a personal relationship that, either you have it or you don't. And I know that there's no way on earth that I would have figured this stuff out. It would have not ever happened had He not intervened. And He's continuously intervened. And every time I sit down with my students, before I do so, I pray and I say, look, give me wisdom, help me guide them so they don't get hurt, and let them receive something that, is intended for them. And that's how I do everything. And if it doesn't fit your expectations, or if you don't like that type of thing, or it doesn't resonate with you, God bless you anyway. I'm sure if you look hard enough, you'll find somebody out there. And I do it all the time. If you don't like me, look at Chris Laurie. He teaches price action. He doesn't teach what I teach, but I've seen some of the things that he does, and I think it's noteworthy. So, you can look at a lot of his stuff. It's for free too. He has something that's paid. I don't know everything he teaches in his paid stuff, but there are other people out there besides ICT that can make money and can also teach. And just because they don't dance to your drum beat doesn't make them a scammer. If they're certainly willing to show you things in great detail before you even pay them a penny, then maybe they have something that's worth listening to. Maybe you learned something from this video, maybe you didn't. But I answered the question as why I think Forex is better, because you can frame it and make the risk specific to you. And having 20 cents per pip, okay, that's what this equates to, 20 cents per pip. You can't really frame that with the futures market. It doesn't allow you to do that, okay? So I think that's a benefit by trading Forex, because you can scale your money management more appropriate to your equity base. And you can do that throughout your career, where as you're a trader in Forex, or if you're a stock option trader, you have to pay the premiums and use the vehicles and the multipliers for the option. In other words, like it's a multiplier of 100. So whatever you pay in the premium, say the premium is 4.5, the option costs you $450 plus commission. What if you don't have that? What if that's basically 90% of your account balance? And you can't do the trade. You got to do something else. Wait for something else. Well, with Forex, you can find setups a couple times a week, and it doesn't matter as long as you have what I'm outlining here in terms of equity base as low as $300. You can still find setups and build the account up. And it takes time, but you're learning how to do it appropriately. Until I talk to you next time, I wish you good luck and good trading.